Good afternoon, ladies and gentlemen. Of course, I want to say good afternoon to those of you joining me here on the East Coast. It's just after 12 noon on Wednesday, August 17th, 2016. I also want to say good morning to those of you joining us in the Central Time Zones, the Mountain Time Zones, or the Pacific Time Zones. And of course, good evening if any of you are joining us from across the pond in parts of Europe or parts of the UK. And of course, good early morning for anyone joining us from parts of Asia or Australia. Well, welcome to today's presentation on the PowerOptions Portfolio tools. Today we're going to take a look at these powerful tools to help you track, manage, and evaluate rollout opportunities for your existing options positions, as well as, of course, using the portfolio tools to paper trade perhaps a new strategy that you're interested in trading. Before we begin, we always want to start off with a brief description of what is PowerOptions. PowerOptions is a patented suite of search and analysis tools designed for self-directed options investors. Ernie Zarenner created the PowerOptions tools back in 1997 essentially to trade his own personal account, but after a while he decided to post it on the internet so that several of his colleagues and several of his friends from HP could use these tools to trade their own personal accounts as well. Of course, over the years we've expanded the tools to a great variety of different strategies, different signature tools as well, and of course incorporating aspects into the search criteria, technicals, and fundamentals as well. Our tools will allow you to search across the universe of options in a given strategy to identify only those positions that match your personal risk-reward tolerance. In addition to that, once you identify those positions, you can quickly further research the stock or the option or run different comparisons with different strategies or different strike prices. What we're going to focus on today, of course, is the portfolio tools to help you paper trade, track, and manage your positions. Of course, we also offer countless educational articles, help pages, tutorials, help videos, and archived webinars to help you get more familiar with the tools on the site and the various option strategies available as well. My name is Mike Chupke. I'm the Director of Education here at PowerOptions. I've had the great pleasure of working with Ernie Zarenner and the PowerOptions staff for the past 15 years. I do handle a lot of the coaching sessions, education, and webinars, obviously, for PowerOptions and for radioactive trading. I have co-authored 2 books on options investing, and I've also presented around the country with different seminars in places such as Texas and Florida, Atlanta, North Carolina, Philadelphia, Chicago, of course, as well. All right, now as I mentioned, what we're going to cover today as we head into standard August expiration on Friday, we're going to talk about the benefit of the PowerOptions portfolio tools to help you more quickly track and manage your positions. We're going to talk about the simplicity of just creating a new portfolio in PowerOptions, entering the positions into the portfolio either manually or from the portfolio tools as well, the basic search tools. Then we're going to talk about using the analysis tools in PowerOptions portfolios, evaluating the rollout opportunities, or doing manual adjustments with the profit and loss chart as well. All right, well, I had 2 comments come in. Sam, hi, it's good to see you here, and of course Bruce, hi as well. 2 of the many gentlemen and ladies that are joining us today for the presentation. Let us navigate over now to the PowerOptions suite of tools. And of course, as you can see here, the PowerOptions tools are designed by a tab navigation system. The portfolio tool is always listed as the second tab. It's locked in place there. And inside the portfolio tool itself, there are a variety of different tools that we can use. To start off with first, the main portfolio tool, the sub-tab portfolios under the My Portfolio tab, is where we track our open positions. As we make adjustments, roll different legs and close positions, we'll be able to see a running track record in the transactions and in the analysis view. You also have a simple snapshot so you can see where your stocks or options are today, change up in price. There's an allocation tool so you can see your allocation for moneyness, sector or industry, as well as other features. Any position that you set in PowerOptions, any options trade or any stock trade even, you'll be able to set a variety of different alerts, which we'll review today as well. But once you set the alerts, you can always come in quickly and just check the alert summary to see what alerts have been triggered. Subscribers to PowerOptions can also select to have those alerts emailed to them when an alert is triggered. Now, when I'm first creating a portfolio, if you're just starting out with Power Options, or maybe you've been a subscriber for a few months and you've never set up the portfolio, the first thing I want to do is go to the My Portfolio tab when I log on to my account, and then we're going to click on Setup here in the available tools. The setup just allows us to view the current portfolios we already have created. We have one for radioactive trading and, of course, the Foot Locker comparison for a webinar we did last week comparing different strategies. But if I'm just creating a new portfolio, this is the only list I'll see here if this is your first time accessing the portfolio, and I want to use it to mimic my actual trading account and my broker, what I do is just give this portfolio a name, and we'll just call it Trading Account 41317. And I can set in two variables here, the cash on hand and the starting basis. When I'm opening a new portfolio, the first thing I want to do is, let's say that right now my trading account at Fidelity or Interactive Brokers, for example, or Trade King, any of the brokers available, that I have a portfolio value of, let's say, $42,000 roughly. And I know that right now I've allocated maybe $25,000 of that to trading, and I have roughly maybe $17,000 of free capital available. But when I'm opening a new portfolio to mimic what's in my trading account on Power Options, what I'd want to do is put the cash on hand at $42,000, my total portfolio value, and copy that over to the starting basis as well. And of course, we might want to adjust the starting basis date. I'm going to put this at July 1st, 2016. Now, once I've put in my information for the portfolio, we'll click Save All Changes, and that'll just create the portfolio for us. We're still in the Setup field, but now to start entering my new positions, we want to click on the Portfolios tab, and this will take us to our new portfolio. I can toggle between the other portfolios here in the drop-down menu from Select Portfolio, and as you see here over on the far right-hand side, we have a basic portfolio details view. We set up our portfolio for July 1st. Our starting basis is equal to our cash on hand, and of course our buying power is the same. The buying power will adjust when you enter something such as a credit spread, cash secured naked put, any position that requires margin. You'll see that appear in the margin requirement field, and your buying power will adjust based on the standard margin requirement that would be needed for that particular trade. Now, when I'm looking to enter a new position, something that already exists in my portfolio, and I'm trying to record the Power Options portfolio to mimic my actual trading account, we'll just go into the Enter a New Position drop-down menu, and I'll click Strategy. And before we enter a new position, we can enter just a long stock or a short stock, buy a call, selling a naked call, buying a put or selling a naked put. But when I'm combining strategies, such as a collar or a married put, for example, or a covered call, I don't want to enter it as a long stock and then enter it as a short call. We'd enter it as a married put, as a covered call, or as a collar, for example, so that the positions are linked and we'll be able to see the full analysis for liquidation versus future expiration in our analysis view. Now, before I enter a position, I have one position in mind we're going to use to track and manage, but we want to make sure that we apply today's presentation to all of you in attendance. So the first thing, I'm just going to ask a quick poll, and I want to know, what strategies are you currently trading? Are you mainly looking at covered calls or cash secured naked puts, sort of parity trades of one another? Are you currently trading protective strategies, maybe the radioactive positions or standard collars? Are you looking at vertical spreads, bear call credits, bull put credits as well? That includes maybe iron condors or butterflies. Are you mainly buying options right now, buying calls or buying puts, speculating on a market movement, or perhaps you're taking a look at maybe straddles and strangles around earnings? And last but not least, you may be looking at sort of time spreads, the calendar spreads or skew spreads as well. So I'm just going to leave this poll open for about a minute, about another 20 seconds or so. I encourage you to vote. Okay, we do have a good showing here. Not too surprised by the results, so that's good. All right, I've had the poll open for about a minute, so let's go ahead and close the poll. Most of you have voted for this particular poll. I'm going to go ahead and close the poll, and let's share the results with everyone. So we have 56% of you doing covered calls and cash-secured naked puts, and 22% are doing the vertical spreads, bear calls and bull puts, and then 22% of you are buying options as well. All right, fantastic. One quick follow-up poll. We'll get back to the presentation. What I'd like to know is, what tools are you using right now to track and manage your positions? Are you mainly just using the tools that are available on your broker? Do you have your own spreadsheet that you use, maybe something you created or something that you found online to download? Do you use a third party, a different portfolio set of tools that isn't related to PowerOptions, or are you currently using the PowerOptions portfolio? So again, we'll probably just leave this poll open for about another minute or so. A nice distribution here, the different selected tools. And if there's a different tool that you use, something that's not available in the selection, remember you can use the question pod to send that to me at any time as well. All right, well, it looks like we've had the poll open for about a minute. Let's go ahead and close the poll here, and again, I'll share the results with everyone as well. Now, 45% of you are using the tools available at your broker. 18% of you have your own spreadsheet or your own created tools that you use on your own, and 27% of you are using a third-party tool that's not related to PowerOptions to track and manage your positions. 9% of you, of course, are using PowerOptions. Well, fantastic. Let me go ahead and hide those results, and let's get back to our main screen here. All right, so I'm going to put in a position that I might have entered. We're going to take the 56% of you, of course, we'll enter positions for everyone, but the percentage of you, 56% of you that did covered calls and naked puts, let's say back on July 18th. I was interested in Foot Locker after it had a collapse for its earnings back in May, but it started to come back up to about the, from $55 back to $58 per share. Let's say it had a bullish outlook on it. So I entered a covered call on Foot Locker, bought shares of stock at $58.57, and at the same time I sold in August, coming up to this Friday, 60 strike call for $1.43. So I want to enter this position, but I want to have it as a linked position. So I'm going to select covered call to enter the position into the portfolio. This will just take me to a simple interface. We'll put in our stock, and let's say we did 200 shares of Foot Locker. And of course, I'm going to change the transaction date. We did this on July 18th. Since this is just a simple presentation, we'll put in a commission fee of 0. But let's say my commission fee for the 200 shares of stock was $7.50. So let's put in that commission. And the price per share I said was $58.57. Not $583, $58.57. Now at the same time, I want to sell an August call against the position. So I'll click on select the option for the entry. And I did sell the August 60 strike call, sold 2 contracts. It's a simple 1-to-1 ratio here for our covered call. Again, the time frame is also 7/18. I'll put in a commission here of, let's say, $5.95. Now at the time, I was able to get $1.43 for this particular call. All right, let's go ahead and submit the trade now that we've entered in the basics, just a real quick interface. And we now see that we have a listing of 1 covered call. Now there are 4 different views that you have in the main portfolio as you're tracking your positions. The standard view here on our available tabs just shows us the breakdown of each leg individually. Now this is common to what you might see on your broker. You'd have a listing of just the stock and just the option. You'd see the change today on the option. You'd see the change today of the stock. But it's not put together as a linked position. That's one of the benefits of PowerOptions. As I open multiple positions, I may see them organized here. I might have 5 covered calls, 2 naked puts, 3 collars, for example, and 2 straddles or 2 strangles. But they'd be broken out by category rather than having just a listing of individual stocks and individual options that aren't linked into a similar strategy. Now when I go to the second view, the position analysis, The position analysis view adds 6 more columns. And these 6 columns, the PowerOptions system knows that we entered this as a covered call, or if we linked from the search tool or the search by symbol, it knows the combination of an equal amount of shares of stock and a short call is a covered call. So the benefit of the position analysis view is I now see my total position cost for the 200 shares of Foot Locker, including the commissions, and the premium we received, the $280.05, minus the commissions, of course, for the premium call that we sold. Now it also shows us my original expected gain or loss. Well, on a covered call, the maximum return, if the stock remains above 60, where it is right now, would be 4.9%. But going into the Friday expiration, we can see here the buyback cost for our call is still $180. Stock's a little bit above that. It's trading at 60.46. So we have a buyback cost of $180, which was more than we originally received. So our current liquidation value, where do we stand right now? If we sold to close the stock and bought to close the call, our liquidation gain or loss would be 2.2%. The future expiration value, now we're not projecting, of course, where the position's going to be, where the stock's going to be in the next 2 days, but this is showing us that if the stock stays at the same price through Friday expiration, or in this case remains above 60, then we'd make 4.8%. Why is it $8 lower? My maximum return original expected gain or loss was $5.59. Well, the expiration gain or loss at $5.51 is taking into account that if the stock remained above 60 and I was assigned, I had put in a premium of $7.95 for the stock. The system here knows that if I got assigned, I'd have to pay another stock commission, so that's why that maximum expiration gain or loss, if the stock remains above 60, is 8 points lower. Now, for those of you who are doing more complex strategies, maybe buying calls, buying puts, doing delta neutral positions of legging in and out of long calls and long puts, or maybe trying to keep delta neutral with different spreads, there's also a Greeks view that you can toggle to. And the Greeks view here, of course, will show you the standard Greek combinations, the delta, gamma, theta, vega, rho, of course, and you'll also see volatility. We've also thrown things in here such as the probability that whatever short option or long option you have would remain in the money or out of the money at expiration. And as you have multiple positions, you'll be able to see the Greek sum for all of your available positions as well. Okay, another quick view here in the portfolio is the important dates. And the important dates will show us earnings coming up, perhaps the next ex-dividend date. We've already crossed the dividend date here on 7/13 for the Foot Locker position. And we see here that we do have earnings coming up on 8/19. That's on Friday at expiration before the market. And this is confirmed, of course. That's why the buyback premium is so high. Now, let's go back to our position analysis view. Once I've entered the position, as we're getting closer to an expiration or as we're getting closer to maybe a target that we've set for the stock price, we'll be able to quickly view the current liquidation value versus future expiration value. Typically what I'll do as soon as I enter any position, whether it's a manual position that I entered or it's from the search tools themselves, what I want to do is add in those alerts for the particular position. We'll get to these other 2 columns here, the first 2 columns, the edit more info and then the events and notes field. But when I enter a position, I want to click on View under the Alerts column to set various alerts. So let's say that when we entered this Foot Locker position, we had stock at 58.57. We sold a 60 call that was out of the money. But let's say we were hoping that the call would expire worthless. We wanted to maybe continue to sell premium against Foot Locker and reduce the cost basis over time, although we probably wouldn't mind being assigned and getting that 4.8% return. But if I was looking to stay out of the money, or in any covered call or naked put or any position, we can quickly set alerts that we want for the stock or for the option as well, or for technical information on the stock also. So with the 60 calls sold, maybe I want to be notified if the stock moved up above my short put strike price, and I might set this as a red alert there. Or maybe if the stock dropped 5% from when I opened the position, let's say down maybe $3 from my initial entry point back to 55.50, and we set that as a red warning as well. You can also set various alerts for the option ask price, the percentage change, days remaining to expiration, and you'd see these available. If I entered a spread, I'd be able to enter those changes in the option price for both the long and the short option, and if I have a multi-leg strategy, we'd be able to set an alert for all different legs. We can also set an alert for entire position change. So if I wanted to be notified if my entire position, call plus stock together, dropped by 5%, or if it increased by at least 10%, we could set those alerts as well. Normally, when I open any position, whether it's a collar spread, whether it's a credit spread, or whether it's just buying a call or buying a put, I would have had criteria set in the Power Options search for things such as simple moving average, maybe Bollinger Band, or maybe because it was a dividend-paying stock. So in the underlying alert settings here down at the bottom, if I had entered this position with Foot Locker having a criteria of the stock being above the 50-day moving average, I may want to set an alert to be notified if the stock drops, if it changes direction and drops below its 20-day or its 50-day moving average. I also may want to be notified if I'm within 3 days to earnings, for example, or 3 days to the ex-dividend date if I didn't want to risk early assignment on a call that was just at or slightly in the money. Now, as I mentioned, subscribers to Power Options, you'll have a choice up here to allow alerts to be emailed to you. So anytime an alert is triggered in your portfolio, you'd receive an email letting you know that an alert has been triggered, and then you can go to Power Options and evaluate potential actions. All right, let's go ahead and save our alerts that we've just set for the Foot Locker position. And now, as we see, we set that upper limit of $60 per share on the stock. We've crossed that. The stock's trading at 60.46, so our alert is highlighted. And of course, it's shown here highlighted for our upper stop limit, what the alert was triggered. Okay, so now that an alert has been triggered on my position in the portfolio, I'm going to evaluate taking action. Okay, so maybe I wanted to stay out of the money. The stock's now slightly above our short call strike price. We want to look to manage the position. Of course, we know many of you have your own spreadsheets. Your broker shows you that, okay, you can buy this back for 180, but then you may have to go to an option chain and manually evaluate, well, which one is the next best strike to roll to? Do I need to go to September? Can I stay in August? Do I need to go out to October if I'm trying to roll for a credit? Well, what we like to do here on Power Options is make that easier for you. So as you're tracking any position in the portfolio, we can go to the Edit More Information button, where we'll have links. You can go to the broker link to Options Express, for example. You can quickly view the profit and loss chart or company information. What we want to do is go into the Position Actions menu from the More Information button. The Position Actions menu, of course, will allow you to close the position. So if I got assigned, I would just select Close Position. I can close an individual leg. If I did make a mistake entering the position, we could choose to edit the position here. If it's just a paper trade, we could delete the position. If I converted this to a collar by adding an out-of-the-money put that I already did, I could select Add Option Leg, and of course we'll also add the dividend. But we want to see here now that our alert's been triggered and we need to evaluate an adjustment. I want to click on Position Analysis. The Position Analysis view from the Edit More Information button inside the portfolio will give us a breakdown of our current position. We know that our break-even was at 57.21. The current buyback is $1.90. Our call has a delta of 0.63, and there's 2.4% premium of time value remaining in the call. This is due to the inflated implied volatility with earnings coming up Friday morning, day of expiration. We see our profit and loss chart here over to the right-hand side. Of course, we know the stock is now trading above our short call strike price, but we want to adjust it. Okay? We want to evaluate potential adjustments here because we want to stay out of the money and we don't necessarily want to get assigned in this example. Now, as I scroll down below the basic representation and graphical interpretation, we see similar breakdown of what we saw on the portfolio when we went to the analysis view, the position analysis view, instead of the standard view. Right now we know that we'd make 2.2% after 30 days if we liquidated the position. If we hold it to expiration, the stock remains above 60, we'll expect a max return of 4.8%. Well, how does this make it easier for us? As I scroll down below, we now see available rollout opportunities for the Foot Locker position. Here it shows us the new values, and this is of course for the covered call, but we can see now the new values for downside protection, percent if assigned and probability above, and adjusted total net credit, taking into account what we originally received, and if we bought back our call for the 180 or 190 that's listed, what could we expect by rolling to the September 60 call for a premium of 240, rolling out to the September 62.5 for a premium of 125, or going further out to November. Okay, the Octobers aren't shown because I don't think Foot Locker has an October series right now. The October series is going to appear for Foot Locker after August expiration. So how is this beneficial to you? Well, there's two main things that are beneficial. Number one, the Power Options tools are doing all the math for you. We already know the position that you've entered. We already know what you received. And we're doing the math for you where if you took in the buyback of $1.90 for the short call, what you'd expect to receive and what your new returns would be going forward. Now, I feel that's very important. Rather than doing it by hand, maybe you have your own spreadsheet that's doing it, but when I'm trading any strategy, whether it's a covered call, whether it's credit spreads, even buying options, I have a trading plan and a trading goal in mind. So with a covered call portfolio, I might have the expectation, in addition to what kind of stocks I would use, but that every 20 to 30 days, or maybe you're even using weekly options, so every 7 to 10 days or so, but let's say every 20 to 30 days on a covered call position, I'm looking to have a return of at least 2.5% time value or premium. Okay, so that's my requirement. Now, we could roll, right now, we could buy back our August 60 call for $1.90 and sell for a credit the September 60 call for $2.40. Okay, so this would result in rolling for a credit of 50 cents. But the advantage here only increases my potential return if I hold it through expiration the next 2 days and the stock remains above 60 of 4.8% to 5.9. So that's only a gain of 1.5%. This does not match my trading plan. This is an important feature because I don't necessarily want to roll for the sake of rolling. Okay, a lot of times you may see adjustments or rollout opportunities, but if the premium's too high on your buyback, which I agree in this case it is because of the situation with the position there, but if I'm looking to buy it back at a higher premium and I have to roll for a credit, the overall effect does not match my trading plan. So moving from potential 4.8% in 2 days, then increasing my time by 30 days to only 5.9%, that doesn't match my trading plan. If I want to stay in the position longer, we know that we already took in $1.43 up front. We have to pay back the $1.90, but we could roll to the September 62.5 call for $1.25. Now this is rolling the option that we're in for a debit, but we still keep an adjusted net credit of 78 cents, and our gain moves up from a potential of 4.8% to 8.2%. So we're gaining another 3.4%, which does match my trading plan. Now, of course, I could roll to the November for a higher premium or even the November 60 and increase it, but remember, this is for 93 days out in time. So going to the November 60, of course, and increasing the return up to 7.8% by selling a November 60 and receiving 340. Well, that does increase it by 3%, but over a 93-day period, that only comes down to 1% per month, which again does not match my trading plan. So the target here, even though I'm rolling for a debit in this case, is probably the September 62.5. And I know it's complicated to see the numbers there, or sometimes a lot of us don't like to evaluate it in numbers, and that's perfectly fine. Now that I've seen quickly which rollout opportunity matches my personal trading plan. We can now click the More Information button next to our potential rollout opportunity of the September 62.5 call and click on Simulate Trade. The Simulate Trade tool is very powerful. It gives me a side-by-side comparison, graphically and numerically, of my existing position on Foot Locker right now. Then again, we know that our current liquidation return is 2.4% and the max return is 4.9%. But if I perform this adjustment, I can see my new total investment into the position, and the max return, if we're assigned 62.5, goes up to 7.9%. And we see this graphically here as well. So this would be a good roll opportunity if our long-term plan was to stay in Foot Locker, collect the dividend, which is only about 1.8%, but at the same time continue to collect a dividend like premium month by month by selling the out-of-the-money calls. So we wanted to avoid assignment. We want to move up and strike. We targeted the September 62.5 as the one that matched our trading plan. Now that we're comfortable with the graph, if the graph matches my expectations for the stock going forward and what my expectations are for this position, we can go ahead now and simply submit the change to the portfolio right here. So let's just put in that we're going to buy at a close the August 60 call, and we're going to put in a midpoint price we saw there, about 190. And then we're going to sell the 62.5 call for $1.25. And let's say our broker just charges us an extra 50-cent commission for this roll adjustment in addition to the $5.95. All right, so let's just go ahead and submit the change to portfolio. And now we'll be taken right back to the portfolio tools. We're looking at the same position kind of that we saw before, but something else is taken into account now. We're now looking at the September 62.5 call that we just rolled to, and notice that our cost basis has adjusted. We did move the cost basis up because we rolled for a debit. Now that I've moved my portfolio, or I'm sorry, moved the short call up in price, the next thing I'd want to do is change my alerts. So we'll go back into view. We had that alert set at 60, but now that I have the 62.5 call, let's just go ahead and set this alert at 62.60, just a little bit above our 62.50 strike. And we'll leave that as a red warning, and we'll keep the lower range at 55.5. All right, let's go ahead and save the alerts there. Okay, so now we're back to our position. We do see an alert is triggered here. The yellow alert's triggered, and that's because we know we have earnings coming up within the next 2 or 3 days. Okay, well, what happens to our August 60 strike call? It's no longer shown here in the portfolio. We're just looking at our current open position. That's what's shown in the main portfolio view. Well, we can go into the Transactions tab, and we see here that we have our unrealized. We just selected to look at all positions, but in this analysis view, transactions view, excuse me, we can also choose to look at the realized gain or loss or the unrealized gain or loss. But here, looking at all positions, we do show the September 62.5 call that we just sold. The gain or loss is not available because it's still an open position, as is our stock. And we did have essentially a loss on the short call as a realized loss. As you remember, we collected $1.43 for it up front for 2 contracts. We paid $1.90 to buy it back. Ernie created this transaction view as sort of a better means to evaluate taxes as you approach the end of the year. So you'd be able to see your realized gain or loss in all positions and the total running gain or loss for all your stock and options positions, either realized or unrealized, and that's what you can use for tax purposes, or whether if you have to narrow it down to claim short-term versus long-term as well. The analysis view in the portfolio, the sub-tab called Analysis, what this will do is track all of your positions by symbol. And we have highlighted in here the red positions, sort of pink or red positions. Those that are highlighted in red are our current open positions, and the ones that are not highlighted are our actively closed positions, our realized gain or loss. So this gives you a running tab over time of where your position stands as you roll and adjust legs, and we can see right where we expect it to be. That 2%, 2.2% gain that we had on the position, we're still at a total gain or loss at 2%. This is including if we had to buy back our call right now at 290 for the 2 contracts and sold to close the stock for a value of about 12,118. So that 2% includes a total liquidation, but a running total of closed and open positions as well. As I go, let's go to the radioactive trading webinar here. So you see here the different legs are shown on my position for open positions and closed positions, and a running total of gain or loss on each individual position in the portfolio as you track them going forward. So you can always go back at any time and see the running total. While we're here, we can just take a look at the snapshot view for the Foot Locker that just shows you the gain and loss today. Of course, if you have multiple legs, you just quickly see the gain or loss today. It's not the gain or loss in your overall position, but just a quick snapshot of the gain or loss today. And again, as I mentioned, the allocation field, let's go, well, we can't, these aren't going to show us a real good breakdown, but it's showing you the breakdown of asset allocation versus cash, and you can change it from investment amount to position value to total number of positions. So we go to the radioactive trading one there. We see a better breakdown of our asset allocation by different sectors and industries. We can also break down the position value as well to the different structures also. All right. And then finally, the alert summary. This just gives you a running tab of any alerts that you've set in any portfolio. In the tools, as you've seen, you can create as many portfolios as you want, and you can pretty much have up to, I think, over 100 different positions in each portfolio as well. All right, so now let's go back to the portfolio tools. And real quick, we did have some investors who mentioned that they were buying calls on positions as well as doing the credit spreads also. So let's say that we had entered a bear call credit spread on Foot Locker. I haven't tested this one yet, but maybe we'll see some rollout opportunities. But let's say at the same time, we entered a bear call credit spread on Foot Locker because we were bearish on the stock, and on July 18th, we sold that August 60 call for $1.43, and we bought the August 65 strike call to complete the bear spread for 25 cents. So again, I don't want to enter it as a short call and a long call. I'm going to scroll down my list here. We're going to enter it as bear call spread. So when I link over the position, have a simple entry for which options I'm entering. The system doesn't know yet which stock we're using, so I'll click select option for the sell option, and it'll just prompt me to put in the symbol. And then it'll take me right, of course, to the easy interface of selecting it from the chain. So we know that we sold the 60 call and we bought the 65. And of course, we're going to change the transaction date first. So let's just adjust that to the 18th very quickly. And let's say we did 10 contracts of each position. Commission fee again, we'll just put in $5.95 and then the additional 50 cents to complete the spread. Now remember, we only got $1.43 on July 18th, and we would have bought this one for 25 cents. I know these are the actual prices because this bear call spread is actually a trade I'm in, but nested into a radioactive trade, what we call income method number 6. So I generated the premium, but I still have unlimited upside because it's done in the context of owning the stock itself. But let's enter our bear call spread. And again, we sold to open our 60 strike call for $1.43, but for 10 contracts, so we took in $1,430. And we bought 10 contracts at 25 plus the commission, so it cost us $256. Now again, we originally expected a profit of about 30.7% on this spread alone. We took in for 10 contracts, we took in a premium of $1,174, and if the stock stays below 60, everything would expire worthless, of course, and we take that based on our margin requirement here of about $38.20, $5,000 minus the $1,174. So up here in our portfolio details, we see the margin requirement is added for the margin we would need to enter this 5-point spread. Now we see our current liquidation value for the linked trade. The system knows that if I had to buy to close my short call now and we sold to close the long call for 33 cents, we'd have a loss of $3.83, which is 32.6%, not of our margin requirement, but of what we originally expected to make. And of course, if we hold the position to expiration, and the stock stays at, again, 60.59, which means we'd only be required to pay the intrinsic value of 591 on the short call, we'd have a gain of 583. Now this shows a gain on 583 of 49.7% at expiration if the stock stays right where it is at 60.59. We know it's going to fluctuate. But what this 49.7% reflects is the profit we would make compared to the max profit we'd expect to make. So if we hold it to expiration and it only costs us $5.90 or so to buy to close our short call in this bear call credit spread, we'd still have a profit of $5.83, which is about 49.7% of the $11.74 we expected to make on the position. Now again, of course, when I had put this position into the portfolio, I would have set various alerts as we did before. Probably would be triggered now because the stock's trading above short call strike price. So let's take a look here. Now that the stock has moved above the short call, again, we go to position actions. We have our choices here. We can close the leg, roll the leg, expire the options. So when I go through expiration, if the stock did pull below 60 for my bear call spread on Saturday or Sunday, I'd put an expire all options, which would close it out, and then the portfolio would reflect the overall return. But again, we want to go to position analysis, see if there are any rollout opportunities available. Well, here's our profit and loss chart again of our bear call credit spread. We're showing the original net credit and the original maximum risk. As we scroll down, we can see the current liquidation value at the market price versus midpoint. So we'd get a little bit better deal here, closing, of course, at midpoint than at the market price. And again, the current profit and loss based on the liquidation value. Now, we don't see any calculated rollout opportunities available for the bear call spreads at this time. And that's okay if you don't see a rollout opportunity for your position. But let's say I was contemplating maybe rolling this position to a new strike price, or maybe adding some protection by creating an iron condor by selling the bull put spread for maybe even the next 2 days with a little bit of protection there. Well, if I don't see a rollout opportunity, what I can do is click on the what if calculations button here, and this will take us to the profit and loss chart for our existing spread. Now, what we can do on this is the custom spread tool or the profit and loss chart. So anytime you link to the profit and loss chart from the search or even from the main portfolio view, we'll be taken to this page here. Now I want to simulate maybe a couple things. What would happen if I think that the Foot Locker might stay around the 60.59 or drop a little bit? Maybe I want a little bit protection if I think it may even go to 61. But I don't think it's going to drop below $55 per share in the next 2 days. Well, I may be able to add a bull put credit spread to create a condor to give me protection on both sides. So while you're in this tool, you can do manual adjustments. So I'm just going to click on View Options up here at the top. I'll go to August. And let's go ahead, not a lot there. The puts are a little bit less priced. So maybe let's go ahead and try the 57.5 put at a midpoint of 50 cents. We're going to enter a bull put spread here. Sell 10 contracts at 50 cents. Oops. And at the same time, let's go ahead and add a 52.5 at 10 cents. So this is only giving us 40 cents net credit, but it would pad the upside a little bit and increase our upper break even from 61.18 at expiration to a different value. Well, let's go ahead and see what it looks like now. We see our new profit and loss chart for the position. We do increase our upper break even up to 61.58. And we have a lower break even of 55.92. So if the stock pulls back and stays between our ranges, then okay. We might have a higher return here. Your broker may or may not increase your margin depending on how they handle it. I know my broker that if I entered a credit spread, a bear call on 7.18, and now add a bull put to complete the iron condor position, they would charge me margin on both sides. But if I entered it all at once, of course, I wouldn't have to cover the margin on both sides of the spread. All right, but this gives you an easy way to evaluate what the management techniques would be, potentially. Another management technique you might use for this spread is we know we're coming up into earnings on Friday. So what you might consider doing is, well, if we were bullish on Foot Locker, it moved against us. This is, we're in a bear call spread here on Foot Locker. But another management I might consider is, what if I just bought to close the 60 call? I know that the price was around $1.90 and left the long open because I'm bullish and I think the earnings coming out Friday morning might cause the stock to move up 5, 8, 10% or so. So we can just simulate that as well. Go to View Options. Now I've already added the 60 call in, but I want to click it again. That adds that back in. We'll buy 10 contracts, and we'll use that midpoint we saw of about $1.90. Okay. So what does this mean? Well, this means now my total cost basis into the position is $7.20. What have I effectively done? Well, I've canceled the bear call spread, and right now I just have a long call open that we originally paid 25 cents for per contract. And with this roll from 143 to 190, we have an additional cost of about 47 cents, right? Okay, so we lose on the debit there, we lose 47 cents on the buyback. So now coming into earnings, I'm holding a 65 call with a cost basis of roughly 72 cents. So if the stock gaps up, we may see an increase in premium. Of course, it would have to go up above 65, and the break even once earnings comes out and the volatility gets crushed would be 65.72. So that's a high expectation, but again, this could work if the stock gaps up. I could, of course, now maybe add a cheap put. Now that I've done this roll to create the long call, going into earnings, we could add a strangle to that as well. We could simulate adding a put and evaluate the profit and loss chart there to see if it matches what we want to see. For those of you, by the way, that are doing credit spreads, bull put credits, and bear call credits, I want to remind you, take a sidetrack here. If you go to our webinars page, this is a public page. I'm going to send everyone the link here in the chat menu. Okay, so we'll go to powerop.com/webinars.asp. Well, two of the most popular webinars and most demanded webinars that we have, if we go into the options strategies category on the webinars page, are the webinars on managing your bear call spread. We walk through the 7 ways that we prefer to manage a bear call spread and use the portfolio tools to showcase those. And there's also one down here from September on managing your bull put credit spread. So the 7 ways we look at to manage a bull put spread, and our most recent one from a couple of weeks ago, 7 ways to manage your bear call spread. So those of you that are doing the spread positions, you may want to take a look at our management webinars there. Again, it's completely free to access. Just go to powerop.com/webinars.asp and click on the option strategies. Of course, there's also webinars here on managing your long option positions. Let's take a look at that as well. So I'm going to go back to the portfolio. And we know it's not really a gain as much as we'd want, but for those of you doing the long options, 22% of you buying calls and buying puts. Let's take a look. We'll use the same example here. Let's say on or around 7/18, we bought the August 60 call for maybe a cheaper premium. Maybe we got a better price earlier in July for around 110 or 120. So let's see what that would look like. Simple interface again on long call. When I'm entering a position manually, the system doesn't know what stock I'm using yet, so we use Foot Locker. We'll hit August. And they bought the 60 call. Let's say we bought 5 contracts back on July 7th or so, and we paid 110 instead of the 143. And we'll just leave the commission blank for now. All right, so we're going to enter in our 5 long calls. And we know we have about an 80-cent gain. You know, the close now is at 185. The midpoint for the current price is at 185 for our August 60 call. So we do have a gain of about 68.2% from our investment. Now, as before, we would have set different alerts for the long call position or the long put. But as we're tracking the positions, let's go to position actions. Once again, we can go to position analysis. I want to see if anything comes up here. Okay, so now we have some rollout opportunities. It says here, it shows us that we could consider rolling to a higher strike price to take some money out of the gain, but still ride for a profit. Okay, and what does that mean by that? Well, we could sell to close our existing 60 strike call for the $1.85 and take in about $3.25. And then we could go ahead and maybe buy an out of the money call for 90 cents, or we could buy the September 62.5 for $1.40. But remember, our cost basis now would only be 75 cents. We could reduce the risk by rolling it up. I'm going to edit something very quickly. I'm going to go back to the portfolio. Current price is 185. So again, let's go to position actions and then edit the position. I'm going to cheat a little bit here. And I'm going to put in a price basis of only 90 cents. Instead of $1.10, let's say we were able to pay 90 cents for that call. It was a little bit lower in price. Now we have a gain of 105. Doing this for a specific reason. Let's go to position actions and position analysis one more time with a cost basis of 90 cents. Okay, it didn't show up. Other rollout opportunities you'd see here for the long call, in addition to rolling it up, is at times you may see an opportunity for a calendar spread. This one, this one won't work with the calendar spread. It's not going to show a calendar spread because we only have 2 days left to expiration. But if I had bought a September call or the November call where I had a gain of, let's say, 75, 80, or 90% on the call, it would show me examples of selling in August or maybe selling a September call to create a calendar spread with the returns available there. It would show me opportunities of rolling up, as we're seeing here as well. And if you have a gain of at least 100% and more than maybe 30 days out in time when you're long call, it would show you, of course, the math. I believe another rollout opportunity that's shown is selling to close half of it to see if you're bulletproof on the position. But if I did have a rollout opportunity in mind that maybe now with this August 60 call that only has 2 days remaining to expiration, maybe I want to convert it to a bull put spread. I'm sorry, a bull call spread, and see how that would look. Well, once again, I don't see the rollout opportunity I want, so let me go to what if calculations. So we know that we could close this call for a profit right now, which I would probably do. We might take that profit there off of the table. But as we go to the position analysis and the link to the what if calculations, I want to see now what would happen if I sold the 62.5 call to complete a bull call spread, and we got 80 cents for it. Bid is 75, the ask is 90, so let's put in a midpoint of 80, sell that. Let's go ahead and submit it as well. So now we'd have a bull call spread, kind of attractive, where if the stock gaps up in price because the earnings coming out, we only have a total cost or potential loss of 50 cents instead of 90. We've cut that in half. Actually, we've cut it by more than half. I'm sorry. The original cost basis was $4.50. We've reduced that by almost 90%. So if the stock falls below 60 because the earnings, we're only risking 50 cents per contract, or $50 total. 10 cents per contract. I'm sorry, folks. 10 cents per contract, $50 total. And now we have a max profit if the stock does gap up above 62.5 of $1,200 on a risk of only $50. Okay, so we can simulate that adjustment. And of course, if you wanted to hedge the downside a little bit, we could get confusing and say, okay, well, what if I wanted to add in that extra little 57.5 put for 50 cents? I know I'm getting complicated here, but it's just something that you could consider with a gain in a long call now, sort of creating a straddle, especially with this event coming up. Take a look there. You sort of got a little U profit and loss chart, so still potential max profit is high, that's to the downside, but you still have a max potential of $950 if the stock gaps up of a 62.5 as well. Of course, if you were just bullish, you might just leave the position alone without having that capped gain at 62.5, so of course the stock went up to 65, you'd have the better profit. One thing that we did see it kind of, it wasn't what we call being bulletproof on a long call, but I thought rolling up to the August 62.5 call. So if I sold to close the 60 right now for that value of, we're going to call it 185. Remember, we paid 90 for it. We can sell it for 185. So we've got a profit. And then if we bought, yeah, this one would work. If we bought the 62.5 now, oh, sorry, folks, for 5, and this, oh, I'm sorry, this was at 80 cents. We're going, no, 85. Let's go 85 at the midpoint there for buying the 62. So what are we doing? Selling to close the August 60 to realize the gain, and then taking some of that profit and buying the 62.5 with earnings coming up tomorrow. Now we have a call. We'd be holding a 62.5 call at a 10-cent per contract. So we did 5 contracts, a 10-cent per contract credit. So we're guaranteed to make 50 cents even if the stock gaps down, but still have infinite upside if it gaps above 62.51. Again, these are some of the rollout opportunities and adjustments we discussed in that webinar on managing your long options positions. These positions did actually appear, this rollout here did appear in the position analysis from the portfolio for the long calls, but you may see other ones as well based on the gain that you have and how much time you have remaining to expiration on the long call as well. So any other strategies that you're tracking in your portfolio, you'd also be able to go through the same process. You want to enter them, you can enter them manually, but remember you want to enter them as the linked position. You can even track long stock positions, and as the stock moves up or moves down, you could go to the position analysis for just your long stock position, and then you'd be able to see rollout opportunities to create maybe a covered call, create a married put, create a collar position for just the long stock as well. So we've designed these tools to not only help you see very quickly what is your current liquidation value versus future expiration value, in addition to having a quick view for the Greeks and important dates coming up, and a variety of alerts you can set. Any position you're tracking in the portfolio tool, you'll be able to go to that position analysis view. So again, we can see the side-by-side comparison of where we stand right now. And as we look at the potential rollout opportunities, we'll be able to go to that simulate trade feature to see what our position, where we stand right now in our original position versus where we'd stand monetarily and graphically if we went to roll the position based on that rollout opportunity. Then also in the portfolio, have the availability to track your realized gain and loss simply with the transactions or the analysis view. View your allocation, check your alert summary. That's usually the first page I go to when I log on to PowerOptions. I go right to the portfolio and alert summary as multiple portfolios are created. Now, last but not least, let's say here, we've got naked put selected, okay? So let's say that I wanted to start trading maybe 1 week out or 2 week out naked put positions as a new strategy. I want to paper trade it, see how they perform in the next 7 days. So I'll just go to naked put, let's go to search, and I've got the weekly naked puts default screen selected. Okay, so maybe I tweaked my criteria, made some changes, but coming into Friday I've got positions here that we see for 1.7, 1.1, let's say my requirement was at least a 1% naked yield for a 2 to 3 day trade. And I've got these 3 positions here that match that. I'm going to change it. Okay, I want my naked yield to be at least 0.99%. Okay, so let me submit that on the change very quickly. All right, so there are 3 naked put positions. Now I want to track these going through Friday expiration to see how they perform. So after I do research and analysis, my next step is we'll go to the More Information button from the search, and I'm just going to select Add to Portfolio. Now, I'm not going to put this in these 3, and this is the first time if you're going into the search tool and this is your first time creating a search, creating a portfolio, we'll just use new portfolio number 1. And what I'm going to do is just call this 2-day naked put test. Okay, so opening positions on Wednesday for Friday expiration. And it's going to create a paper trading portfolio for me with a cash on hand of $100,000. All right, so now I'm going to click Insert. And now when you link from the search, the chain, or the search by symbol tool, the system knows what you do, what option you are doing. So we just have to put in the number of contracts. Let's put in 5. Let's put in 10 here for the 29.50 strike. Today's date. It's a paper trading portfolio. It's 0, and leave the price at 49 cents. We'll just click Submit. Okay, so now I've created a new portfolio here. We just opened this new position. We'll go back to the Smart Search because it just opened this up in a separate tab. I'll do the same thing with Endo Pharmaceuticals. These are not trade recommendations or suggestions, I just wanted to grab it real quick. So we'll go ahead here. Now I've already created the 2-day naked put test, so I'm going to insert this one in as well. It's just a paper trading portfolio. And 22.50, well, let's do 5 contracts again. Okay, so we'll add that in. So we did 10. Okay, so because it's a lower price stock, I'm going to do 10 of ENDP as well. So again, I put in 5 first, have to edit it. Click on the More Information button. Let's go to Edit Position. And I'll keep all the information the same. Now I'm going to trade it to 10 contracts. All right, so now we've got our 2 positions in there. Once again, let's go back to the Smart Search, where our trading results for the 1% minimum yield for a 2-day trade. And we'll put Line Corp, once again, down here in the More Information menu. We'll select Add to Portfolio. We'll select to keep it in the 2-day naked put test and insert. All right, this one's at 45, so let's do 5 contracts at this one. And again, commission fee will leave at 0. All right, go ahead and submit that. All right, so now I have my 3 positions for the 2-day naked put trade. Of course, I see my original expected gain or loss, and where I am right now, current loss because we just opened the position, so we'd lose to the bid-ask spread, and what's going to happen at expiration potentially. So now I've just created a paper trading portfolio. On Friday, what's going to happen is we'll take a look at the expiration on Friday's webinar at 4:30, our open forum Q&A session. We'll see where these positions stand, and we'll choose to either roll the leg, maybe they'll all expire worthless, or maybe we'll trade it to a different position using the position analysis feature. So we'll take a look at that on Friday's open forum Q&A session. But that's how easy it is just to create a paper trading portfolio. So simply, we'll run our search of what we want. We say, hey, I want to see strangles with earnings coming up in 10 days, and I want to see how the top 5 results would track. We'd put in our long strangle, we'd put in our search, we get our results, we just take the top 5, click Add to Portfolio, put it in the portfolio, and we can track them going forward. We could set alerts on them as well of how we would manage it if it was a real trade, and then of course use the position analysis view under position actions to view rollout opportunities and other information as well. All right, well, ladies and gentlemen, that's pretty much what I wanted to show you today, how these Power Options tools can greatly help you tracking, managing, and evaluating rollout opportunities on your positions, as we do most of the heavy lifting for you, of course, to show you the different new calculations for new max return, new potential probability, and of course the new break-even or downside protection as well. Okay, sorry about that. There's something popped up on my screen. I do apologize. If you have any last-minute questions or something that you want to see, go ahead and send that to me in the question pod. I just want to remind you of our subscription services that are available. If you haven't done so yet, I know several of you that are joining the webinar today currently aren't on a trial to Power Options, or you had a trial maybe in the past and you came to see using the portfolio tools to maybe help better manage your positions. You can just go to PowerOp.com and go to the on PowerOp.com on the right-hand side. You can just put in your first name, last name, and email address, and you'll have a 14-day free trial to Power Options, including all the search tools, analysis tools, and using the portfolio tools going into Friday's expiration. After the 14-day free trial, we do now offer an end-of-day data service. So only get updates at the end of the day, and that's only $40 per month. Our most popular service is the 20-minute delayed. So every time you're running a search or evaluating the portfolio, you're looking at numbers, data that's about 15 to 20 minutes delayed. That's only $60 per month for access to all of our patented search, analysis, and portfolio tools for all strategies, of course. We do offer a historical suite of tools that goes back to April 2006. With the historical suite of tools, you'll be able to run searches based on your criteria to see how they performed over time, as well as view historical option chains. The 20-minute delayed plus historical level of service is $100 per month, so it's only $40 more. We do offer a real-time service, so every time you refresh a search or refresh the portfolio, you're getting the numbers and calculations at that very instance, and that's $120 per month. And then, of course, the full service, which includes the real-time, the historical suite of tools, plus access to the API, is $160 per month. Yeah, okay, sorry about that, folks. The remaining schedule for this week, coming up tomorrow, Thursday at 12 noon Eastern, we'll be hosting a radioactive trading presentation on doing this one thing and change your trading portfolio to skew the market odds in your favor. And as I mentioned, Friday afternoon, every Friday at 4:30 p.m. Eastern Time, I host an open discussion Q&A session where you can join us and bring your questions, and we handle all the questions on the fly and use the Power Options tools to illustrate our thoughts. Of course, remember, at any time you can go to that webinars page, powerop.com/webinars.asp, You don't need to be logged in to access that. It is a public page. And then you can scroll through the various webinars that are listed on Power Options for our thoughts on managing long options, naked put positions, the various spread trades, bull put credits or bear call credits, as well as other strategies as well. Well, I didn't see any last minute questions come in. I want to thank you all for joining me for this afternoon's presentation. We did record today's presentation, and that will be available in the archives later this afternoon. We will send you all an email when that's available. If you do think of a question later on, remember, please feel free to send me an email anytime to support@powerop.com. If you live inside the U.S., you can also call us toll-free during market hours at 877-992-7971. And you can also reach us if you live outside the continental U.S. at 302-992-7971. There's also contact links on the bottom of every Power Options page.